FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz, and today is March 27th, 2018. Well, you've seen a lot of turmoil in the markets lately. Precious metals holding pretty steady, considering everything that's going on. Maybe they should be higher. You've got trade wars going on. You've got all sorts of international instability, but there are options that you have. Person you're about to hear from was on couple months back telling you about a real interesting, pretty stable fund that he's running, and is going to give you an update on it. His name is Craig Cecellio, and the name is called Diversity Fund. And Craig, welcome back to the show.
Yeah, Kerry, thanks for having me back. Appreciate it.
Of course. So, hey, by the way, participate, be a part of the show. Just email us, kl@kerrylutz.com, or just leave us a message. We'll play it on the show if it's good, 914-424-4142. So, Craig, when we last left off, I guess we should start again telling us what exactly you're doing here and why it's different than a lot of what's out there.
Yeah, we're a vertically integrated real estate crowdfunding platform. And so what I mean by vertically integration is that we manage and develop and own the asset. So that means you, as the investor in our platform, actually own part of the properties we invest in. We've been primarily focused geographically in the Western U.S. Within the last about 14 months, put $100 million of assets under management. We're off to a great start in 2018. We've had a lot of properties turn, and we have a few more being fully recycled, is the word, is properties that we have developed and managed up for sale this spring.
Oh, that's excellent. So what kind of projects are you focusing in on now? Now that the money is basically no object here? Just kidding. Money's always an object. Don't mistake my sarcasm. But you've opened up another channel to fund what would otherwise be worthy projects that might not be appropriate for bank financing due to DoddFrank, might not rise to the level where you'd get institutional participation and syndication. So you found an alternate way of doing it.
Yeah, we're using technology to aggregate a large number of investors. We specialize in raising equity that you would need for projects between $3 million and about $15 million. So that's the equity piece. So those projects are larger in size, or $10 million to $40 million projects, and a very specific niche in there. And you can participate for as low as $5,000 today. We're working on opening that up to the 99%. That would be the non-accredited investor. And when that should come through within the next 2 to 3 months, that will have the barrier to entry as low as $500. So we're really leveraging the technology to aggregate all those funds and those larger $500 from a lot of people to get that $5 million to $10 million amount of equity we need for our projects.
So you looking at the blockchain at all for future potential deals here?
We're watching it carefully to see what happens. There's been some recent volatility with it, and our eyes are on that on a daily basis. We believe that's going to cross over the technology into real estate, into financing. Definitely, it's going to trickle down. When, we don't know. I think it's going to have to play its course a little bit, but I find that technology pretty amazing, and I could see it being used in kind of everyday transactions. Really, in real estate, I see it being used in so many different types of transactions. But with anything new, it's always kind of it takes a little time for that to kind of to trickle down into everything else.
Yeah. So, but obviously everybody's got their eyes on the blockchain. It'll make transaction costs so much less for this type of thing. It'll make auditing, control, and reporting much easier, and basically it'll lower the increments that people can buy once everything's tokenized. So yeah, that's obviously where the trend's heading. So in the meantime, tell us a couple of projects you're working on now.
Some of our projects were fully recycled. We're coming out, I would say, of our new construction on single family side. I would say 80% of our portfolio of those types of projects are going to be on the market this spring. A few are on the market, I think, within the next 30 days. We are more focused on income-producing property, value add, and some new construction on the multifamily side. Where we are located, there is still a shortage of housing. So it's still a very, I think, a profitable investment opportunity with the multifamily. But I think just getting out of that single family new construction is a smart thing to do at this point in time in the market.
So get out of it. You've got rates going higher. What about these higher rates? Are they having an impact or going to have an impact on what you're doing?
It may. I think a lot. I look at things if I'm purchasing a property right now to either a lot or a tear down or something that needs entitlements. It's just that I have to look out 2 to 3 to 4 years for that project, and I can't see that far ahead and say it's going to be profitable in 2, 3, 4 years. I could say next couple of years, yeah. As far as I just had an interesting conversation with a good friend of mine actually last night, and he says he's getting multiple offers on all his properties. He said the increased rates have caused people to panic a little bit to buy property now. So I found that rather interesting. That's based on a conversation I just had yesterday with it. So he has a couple properties that he has up to 5 offers on, which I found very, very interesting. And you know how it is, Kerry. That's how you kind of get your feedback of what people are doing on a day-to-day basis.
Yeah. So we're kind of in this uncertain area, but your returns have stayed up pretty high, haven't they?
They've been consistent. We're happy to say that they've stayed consistent. We're able to fully recycle and give everyone the returns we advertised. As alluded to earlier, I really want to be focusing on income-producing properties as much as possible in offer that type of security, that the asset is backed by income coming in with that asset. Returns might be a little bit lower, but they'll still be in the double digits, and that's all we could ask for.
Yeah, so it's in the double digits, and compared to what you're getting, even with increasing interest rates, the so-called safe investments, you're going to receive a multiple on what you could get in whatever, T-bills or treasury bonds or corporate bonds. You're going to be getting close to double or more on what you could get there.
Yeah, I mean, we're shooting for, on our multifamily, we're always shooting for a 15 to 20% IRR on those investments.
Yeah, and that's over time, obviously. You don't get that your first year out. That's going to be after the project has attained fruition and is generating cash flow.
Mm-hmm. Mm-hmm.
So
reposition that asset and reposition that either if you're doing a value add or new construction, replacing the tenants or whatever you have to do to make it cash flow.
Right.
Optimize the cash flow.
So you're seeing, what about the number of opportunities available? Is that diminishing or is that increasing?
That's a great question. For ourselves, we've been around for a long period of time. We always have deals on our table. It hasn't been but for the average investor, I would say they'd have to be more selective. I would find it a little bit more difficult. I think you have to dive a little deeper. You really have to dive into your bag of tricks to get a deal nowadays. For us, we've been around, so we have the relationships in place. We're always getting first look because we could deliver on our projects, and that's for us just having experience. And you know how that goes. The broker is going to call the person who could close the deal. So if you're relatively new, you're really going to have to hustle to get a deal. You're going to have to look at it a lot more to find something good. You might have to go outside your normal markets as well.
Yeah. So your credibility and your familiarity, at least in the local markets on the West Coast, really give you a leg up. At some point, you think you have to branch out from those markets and find other opportunities elsewhere. It's a big country, right?
Oh, yeah. I mean, I was born on the East Coast. I have relationships on the East Coast. So I've also lived in the Midwest. We have relationships throughout the U.S. Currently, it's a little bit of common sense. We have enough deals right now in our geographic area. We don't have to go outside that area, but we're willing to go outside that area to chase the yield.
Yeah. So what criteria does a project have to meet before you'll consider it?
I want to try to do that. Is it the McDonald's doctrine, the location?
Well, that worked well for McDonald's and a lot of others. So location, obviously, is first and foremost. But then you don't want to pay too much for it, because even if you have the best location in the world, you're buying the Empire State Building, but you're getting a 2% cap rate on it. It doesn't make sense, right?
Yeah, I mean, there's ways to look at undervalued assets, whether it's be a poor management team of that asset, that asset needs to be repositioned, as it be rehabilitated. You might understand some changes in zoning ordinances in certain areas. For us, since we're very liquid, we could find someone with cash flow issues to go in and maybe take over a project that's been abandoned. You mentioned increased interest rates. Sometimes that affects people doing some types of construction on some of these projects. So there's opportunities there for us. A lot of bob and weaving, but it's not really that difficult from our point of view. But for the average investor's point of view, it will be a little bit more difficult to chase yield, to find good opportunities. Traditionally, there's always been ways to do things from market conditions to new markets arising due to you could have industries moving into certain areas, which creates more jobs, which you need more housing and more units. There's been natural disasters to go in to rehabilitate things. I always believe there is always opportunity out there for somebody.
Yeah, sometimes, though, depending upon the timing of the market, the opportunities are greater and the potential for profits greater. Are we at the end of a cycle now or at the beginning of a new one? Where do you see the current real estate cycle? Understanding that real estate is a highly localized market and there are hundreds of real estate markets within the U.S.'s large one market. It's really not one market. It's hundreds of different markets.
Yeah, there's markets, and I like to say there's sub-markets within those markets. Not secondary and tertiary markets, but more pockets in cities that are being revitalized or just kind of taken off. I think that's what I saw this time around. Before the last recession, I think everyone's getting to secondary and tertiary markets, and that's kind of what led us down that path. Today, I see some new areas, more kind of sub-market focused. What I see is what I kind of look at history and see what history is, what has happened in the past. So I'm kind of really looking at the regulation, and I hate to say I'm looking at what's going on with politics a little bit because I really don't understand what's going on, and hopefully someone could translate it for me.
Oh, you need to listen to the show more. You'll get it if you listen to the show. That's for another day. But the political environment is the political environment. You kind of have to hold your nose and plunge ahead, regardless who's running it, because you know they're going to screw things up. So taking all that into consideration, where do you go? I mean, where are we in this cycle? Could we go another 10 years, or are we going to see a decline in another 18 months? That's what you really want to know. I'm asking you to basically do the impossible. But in your considered opinion, you've seen, Craig, a lot of cycles come and go. You've been in this business a long time. What do you see here?
Well, I'm looking back at DoddFrank. What was that, 2009, I think? And how it affected crowdfunding was really the passage in 2013 with the 506C offering. I think that went into effect in September of that year. Who passed the Dodd-Frank? Was it more of a Democratic measure to be passed?
Oh, yeah. I don't think they had any Republican votes, and they're scaling it back now. There was a lot of bad things in that bill, too, but without passing on the political purity.
I read something interesting about the Reg A Plus, which was the I think it was Title IV, with the regulation that had limits up to 50 million. And then I read in Congress recently got passed, increased that limit to 75 million. And I bring this up because the Republicans were more in favor of increasing the limit than the Democrats were. Mm-hmm. And it's kind of right on party lines. But the Democrats introduced that into legislation with the Dodd-Frank. They're mainly behind it. So I feel like isn't that ironic how it kind of flipped?
Oh, yeah. That's
where I'm still confused about things. I'm like, what's going on? It's just the politicization. But, I think if there's liquidity, I think the biggest thing is let's look for liquidity in the markets. Mm-hmm. What other forms of liquidity are coming in? Besides the international buyers, is what's the deregulation? How are the banks? How that's going to get loosened? Pay attention to that stuff. You start going and seeing a lot of people doing a lot of leveraging, a lot of financing. I think that's a big red flag. And that could give you a good year head start before something's going to kind of go down. So that's kind of I'm looking at, hey, if there's a major kind of liquidation or some deregulation, they might be hedging that with the increase in interest rates. But, so they could be a little bit smart about that. They're kind of increasing the rate. So if they do deregulate a little bit, it might offset any kind of bubble, but I'm really kind of focused on that. So just my ear as to how people are getting projects financed, how people are purchasing homes, and the leverage on that. And that's my indicator right there. That's what I'm really focused on looking at. I don't know what's been passed or what I'm just listening to the people in the field and what's going on with that. And that will cause me to shift my focus on our asset allocation with that.
Yeah, and speaking of your asset allocation, right now you've been in the acquisitive mode. But what about the potential of selling? Are there projects that have gotten so valuable and maybe overvalued because you've turned them around? They were value adds, better tenants, better management, that now you say the upside just isn't enough to continue on. And I see some other projects that we could go into. You giving any attention to selling?
I love that question because we actually, every single one of our assets is getting an offer on it before we complete it. So it's almost all of them right now. It's amazing. And so, yeah, we're definitely entertaining. We're going down and go, okay, do we just kind of sell this today and just not think about those future cash flows? So a couple of them we have sold. As far as the single family new constructions, I think the majority of them have been sold under construction before completion for a price higher than we thought we could originally get. So yeah, that asset class all day long. Yeah, we'll sell early. As far as the multifamily approach, that's difficult. We do have some offers on some of our stuff, and we're just kind of looking at, and I think you already had the answer in the question is, what do we have that we could stick that money back into? Is it good yields for us, or do we stick it through? And we're kind of entertaining that right now, and so when we do get an offer, we go out and say, hey, what do we have in our pipeline? Where could we stick this in? And some of the plays that we're getting offers on stuff that we had to re-entitle, which was a long process. And so for us to get rid of that, it has to be a pretty big premium because that was a 2 to 3 year process to get that going. And we can't really roll that into another kind of entitlement play in this market.
So maybe what you're saying here in a kind of roundabout way is the valuations are getting pretty high. It might be a good time to conserve some capital and wait a little while for opportunities. Again, nobody knows what the market's going to be. I think it's something you should take a look at what Craig's doing. Diversity Fund. Craig, where do we find you and how do we connect with you?
Easy. It's diversityfund.com. Find me through any of the social media channels as well. We'd love to get more and more people to participate in this. We're accomplishing quite a bit. Sky's the limit here. Really looking forward to getting the 99% involved this year into our investment offerings. Really great for somebody who has as low as $500 to get you to participate in alternative investing through real estate into these larger $1 million development deals and real estate projects, which otherwise you might not have the opportunity to participate in.
All right. Hey, it's a fascinating concept. I wish you the best of luck. I know that for some of you out there, it's probably going to make a lot of sense. You should take a look at it. Hey, questions, comments, we always invite you to be part of the show. Email address, kl@kerrylutz.com. Phone number, just leave a message, hotline, 914-424-4142. The Twitter feed's @KerryLutz. And the Facebook page, Financial Survival Network. Craig, good luck. We'll talk to you again soon.
Great. Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.